Hello and welcome to another update video about Solana. We zoom out first and just want to start with the bigger picture view on the Solana chart. We can see that we are still tracking the orange wave count. Solana doesn't look too bad actually. I think the next low might be the last one. That might sound a little bit optimistic, and I'm not telling you it will be. But it means that after the next low, we will watch very closely for bottoming structures on the Solana chart. So at the moment, we're tracking here a wave 1 between January and end of January. Beginning of January, end of January, wave 1. Then a wave 2 to the downside, and we're tracking the next move up as a third wave. And then it should develop from there. In the third wave, we have an ABC structure, because we're dealing most likely here in the best case with a diagonal. Cannot be impulsive because this move up is not, it's not an impulse, all right? It's not an impulse, it's a three-wave move, unfortunately. That, unfortunately, as I explained in previous videos, leaves a lot of room for interpretation. It just means that also the structure, it's a little bit more fragile, and we just need to be a little bit more on our toes, yeah? Need to be a little bit more careful because it allows for different interpretations. But for now, we're tracking this because the move down looks corrective. Yeah, at the moment, the price seems to be coming down in a B wave. If this move up is an A wave, the move down should be a B wave. And because it looks so corrective, this move down, that's what I'm primarily tracking. I mean, in an alternative wave count, yeah, this here would be a wave 1. The move down, an A wave, an overshooting B wave, so A wave, overshooting B wave, yeah. And then the C wave down of wave 2. Different interpretation would allow for a deeper pullback, possibly even to $10 to $12. Nothing I'm tracking primarily at the moment. Of course, something I'm observing. But if this is a C wave, ideally we would see something more aggressive, for example, and it would be a 5-wave move. And there is even a bearish scenario in which this here is some kind of a wave 4. And we get a 5-wave move down, 1, 2, 3, 4, 5. But then in the third wave, this would also have to be more aggressive. So I'm primarily tracking this as a B wave. Yeah, again, support can still fail, but that's why I'm highlighting, be careful. I can only give the warning and then leave you with it. And everybody needs to decide for themselves how they act on that warning. However, I can tell you that things are not looking too bad and that the next low, as I said, could be the last one. Again, it could also drop lower, but that's why I say it might be reasonable to wait for a first small 5-wave move to the upside after the next low and a 3-wave pullback to determine if we are back in an uptrend. And then this pullback can be bought, for example, in an attempt to trade the third wave rally or the C wave rally actually to the upside. At the moment, price seems to be coming down in a complex combination pattern. We call these combinations, it's a double zigzag structure. Double zigzag is it's a so-called WXY, WXY. Within the WXY structure, we have in the wave W an A wave, a B wave, and a C wave. We have in the X wave an A, B, C. By the way, someone asked me by email what kind of pattern the X wave is. It has to be an ABC typically. Also here, it looks like an ABC, small A, B, and then the C wave to the upside, or even WXY. But it doesn't matter so much. See, it doesn't really matter so much. I think you can count it both ways. Yeah, and then A, B, C. All I want to highlight is that WXY is a combination pattern in which each of these corrections is another correction. So that makes it very difficult and very choppy. You can see that's exactly what it does. By the way, we offer a lot of that education in the membership with a lot of cheat sheets and cheat sheets about Elliott wave patterns, Fibonacci retracements, extensions. If you're interested to check that out, you can find the links to the membership in the video description. Also tomorrow we've got another member live stream, which is always educational. Okay, so if we say, okay, we are in this WXY structure, then price completed a wave W, an X wave, and it's now coming down in the Y wave. In the Y wave, we have this A wave, B wave complete, and we're most likely coming down in a C wave. There are surely different ways of how this can be labeled. I decided to label it as a small 1-2, which you don't see on the 4-hour chart really. A third wave down complete. The fourth wave respected our Fibonacci retracement resistance here at $20.50, and it could now be coming down in a fifth wave. So it's the ideal setup for lower really, but it needs to confirm it by breaking below the third wave low at $19. Still caught in the descending wedge. And on the weekend, the thing is, I don't think we see a breakdown on the weekend. So it might break the trend line to the upside. That would not necessarily be bullish, not if it happens on a weekend. I just highlighted before in a video that if this trend line breaks off the descending wedge, it could, if the sentiment is there, the volume is there, which we will only see when the breakout happens, it could move higher to $21.40 next and then $22.20. Typically when trend lines break on a weekend, it doesn't do much. So just be aware of that, okay? I just always highlight the potential where price could go to, but I see typically retracement levels, Fibonacci resistances as more relevant than, for example, just a trend line, okay? They are more relevant because Fib levels are really what we typically use with Elliott wave. Trend lines are nice. They can sometimes confirm a move. They can sometimes act as a guide. Yes, absolutely. But they don't necessarily have too much relevance. I'm just saying I'm always careful with them because you can just redraw a trend line. And but this is a potential that can of course happen. And if it breaks out and if it rallies, it could just be a corrective rally. So that's why I said we wanna see a 5-wave move up and a 3-wave move down, ideally above resistance, that first 5-wave move, above the initial resistance of $21.40. Now, this is sketched out here, so it should ideally come down lower to ideally $17 and $17.90 into this area. There's also going to be some support around $18.40. And what I like is the 4-hour bullish divergence that's evolving here. Yeah, you can see that actually. For a while now, a bullish divergence has been evolving since middle of August, really. And another low could lead to another higher low. So another price low, a lower low on the price chart, could lead to another higher low on the indicator. Yeah, that's my update about Solana. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. As I said, we offer a lot of educational material in the membership. You can watch hours and hours of tutorial live streams that we recorded in the past that are always educational. We have a lot of cheat sheets, educational material. We offer a weekly live stream that's tomorrow, chat and Discord, or Discord and Telegram chat room access, and for gold members, additional market updates. Also make sure you follow us on Instagram and Twitter. Thanks a lot for watching. Bye-bye.